Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. I'd like to go ahead and take the time to just take a moment as we approach Monday's observed holiday for Martin Luther King's birthday. One of his quotes that I always found impactful is, "Nothing in all the world is more dangerous than sincere ignorance and conscious stupidity." And that comes also to our financial literacy, which you know is another big theme of my site, is people being able to make educated decisions about their financial future. And again, nothing's more dangerous to your portfolio, nothing's more dangerous to your retirement account than ignorance of the different vehicles that are out there to help you save for your retirement, and more importantly, conscious stupidity and not taking your time to educate yourself about all that's out there, risk tolerance, safety. They're all out there, and we have to take the time to see how the market is changing, to see how investing strategies need to adjust to the current market, and make sure that we're protecting ourselves and not just be ignorant and not just be stupid about it's all going to be there. As Robert Kiyosaki always says, if you're just hoping to live off your pension, good luck with that. So as we look at the week that was, we can see that all three major indices, the Dow Jones, the Nasdaq, and the S&P 500 are all up for the year. They all also rose this week, just fractionally, not that much. We're still some contained invested right now. As we do know, we kicked off earnings season. We'll talk about that in a moment. So we may begin to see the market begin to really take direction here as these earnings seasons continue on. So we had a modest gain of 1% for the week. There was concerns once again over debt across the seas in Europe. The week started off with Fitch kind of affirming the top-notch rating for France and Greece, and then later in the week, France has admitted that the S&P has downgraded their debt, so that caused a little selling pressure on Friday. So a little mixed message there, and of course talk about whether or not China is going to change their monetary policy to protect themselves both from what's going on in China and from the European debt crisis. Here across the states, we know that the fourth quarter earnings season has kicked off. Alcoa reported Tuesday, and it was a mixed report. They basically missed by a penny or two. However, the bigger one was on Friday. We had J.P. Morgan miss their earnings, which certainly impacted the financials here coming into the weekend. We'll talk about next week's earnings in a moment. We did have consumer sentiment reach 74 for the month of December, which is the highest level since May of 2011. Again, coming into this week, we do have some key earnings. We've got Citibank, Morgan Stanley as far as our financials. Again, JP Morgan missed. We have eBay, but we also have Google, Intel, IBM. Definitely some big technology stocks that could impact the markets. Looking forward to see what happens there. And again, this is where we may begin to see some direction in the market as we really consolidated for the month of December, and as we have peaked our head above that 200 moving average, and we're looking at that 1300 on the S&P 500. Really see if these earnings can be that catalyst to move us to some of our 2011 highs, or are we going to go back and test the lows? As far as the economic data, we don't have a lot really this week that's going to move the market. Maybe Philly Fed, maybe Empire State Manufacturing. But I really think that we might see money come back into the market, and more importantly, earnings drive the market this week. Okay, so we are going ahead and taking a look at the S&P 500. This is a daily chart. We're zooming in, and we've talked so much about this 200 moving average. Last week we got ourselves above the 200 moving average, and as we zoom in a little bit more, we can see that we've actually gone and retested that 1312.98 resistance price level from late 2011, and there once again is our resistance. So again, what is going to be our catalyst that allows us to bust through here, and zoom out a little bit here. So you can see here's where we're retesting. This is our October swing high. That's what we're testing now. And what's going to allow us to go back and retest the July swing high here. And so currently we have potential of earnings being that catalyst. But what we also see as we zoom in again, we can start to see the ascending wedge going on here that we've been talking about. Again, here's our line right here. Let's click on it again. And dragging it on up. There we go. So we have some support being put in here. We have resistance at that 1300 price level for the S&P 500. That is an ascending wedge. Usually those resolve to the upside, but again, we still need that catalyst that allows us to bust forward. We finally got above the 200 moving average after multiple tries. So now here we are testing that 1300 price level once again. We can see on the daily though that pretty much all of our indicators are overbought. They are overbought. Now we will zoom out to the weekly and zoom on in, and we can see really a couple rising 3, rising 4 patterns here, and again a nice bullish candle that gets us into the October swing high. So we'll have to watch here. Again, looking very nice, but we can see stochastics basically overbought. A little bit more room here to go on RSI, a little bit more room here to go on MACD, but stochastic is overbought on the weekly. We know that the dailies are overbought. Come over here to the monthly, and we can see that the monthly still has some room to move higher here, although MACD is still a little bit up. But beautiful ascending wedge that we can see real clearly here on the monthly chart. So again, we'll see what earnings brings us. Will it give us a catalyst to move higher? We have some of our big technology bellwethers companies coming up: Google, eBay, IBM, Intel. Will that allow us to bust through here? Now let's move over, since we're talking about those big technology companies, and take a look at the Nasdaq. Now we are on the daily chart for the Nasdaq. Now the Nasdaq actually had a weaker December, and so it's made the biggest move here in January to catch up to the S&P 500, and actually testing again this October swing high, which is at 2740-ish. So again, but the question remains the same: what's going to be our catalyst? We can see overbought here on RSI, overbought on stochastics, MACD's hooking over. So as we test this swing high, the indicators are showing that we're overbought. So again, we need a catalyst. We may find that in these technology earnings. We'll go out to the weekly, zoom in, still see the same thing here. And our indicators, here the indicators really pretty much in the middle. So they show there's potential a little bit more room to go up. We'll come over here to the monthly, zoom in here also. Beautiful again. There's that ascending wedge. Looks very nice. And, a little bit more room could go up here. Overall, our indicators are overbought on a shorter time frame. Monthly, coming out of overbought, heading back up to overbought. We'll have to see. Again, our indicators are great, but sentiment and price action is better, and more importantly, catalysts. And we have the catalyst in earnings. Let's take a look at some of those big market companies and see what they're showing us. Okay, as we look at our market leaders, we're starting off here first with Apple. And the main thing we're going to see with Apple is, Monday went up, made a new high, and it's pulled right on back. Apple has a news event this week about digital textbooks. Apple is going to have earnings coming up here also. Apple's also going to have, is it Macworld, or there's some conference also coming up at the end of the month. So there's definitely some catalysts moving on here. But just a beautiful chart here for December and January, continued it up. Beautiful chart. We can see a little point of control here at 421. Just below that, a lot of volume accumulating in this 420 range. And that's going to match with, again, the resistance of where we're at. But definitely a bullish chart for Apple. What about Amazon? Amazon's going to be the exact opposite. Just really fell off the cliff here. 246 back in the beginning of October, all the way down here to the 170s. So about 70-point drop off here. And now, over the past month or so, it's just starting to go sideways, cycling around 180 price level, up and down. So sideways are down for Amazon. Google had a bad Monday. You can see this big red candle here on Monday. But this is, again, why we have to draw our trend lines, why we have to know where our support and resistance, why it's important to know about technical analysis, because it came right down and tested our support of 618. And then it held there Tuesday, and it's holding up here all week. So, that's certainly good. Earnings this week, we'll see. Obviously, we know what the last earnings did. Pretty much both the last two earnings were big gap ups. Earnings here, big gap up. Earnings here, big gap up. I'm not saying we're going to get a big gap up, but I'm saying we're going to have a big move. Earnings this week. Goldman Sachs broke out of this descending wedge and resolved itself to the upside. How about that? We see where we are at the psychological price value of $100. We'll see what's going to happen there. If we can break there, certainly 105 becomes interesting, and 110. But we're kind of moving sideways this week, which is good. If Goldman Sachs can bring us up, that's great. We can see here on the point of control that if we break 98, there's reason to believe that we can go all the way back down here to 94. So we really need to stay above 98, 99 if we're going to stay up here and try to break through 100. But I'm gonna say sideways for Goldman Sachs. How about IBM? Earnings this week. Nice little channel. Again, we can see the 177 support that we've been watching, and it basically came right on down and tested that. Buyers did on Friday once again find value here. So if you missed that, we're gonna have to. I would probably draw a downtrend line here and see when we get a break of that before I would look at being a buyer. I'm gonna say sideways here on IBM. Intel. What we talked about last week on Intel was that it was at its high. You can see these swing highs where sellers came in and pushed it down, and that's exactly what happened this week. But it pushed it back to what we have drawn as a resistance or support level at 25. So we'll see what happens here. Big push down. Intel had at CES proclaimed the future dominance of Ultrabooks to compete with the MacBook Air and and their new chips. So we'll see if we can get out of this $24, $25 channel here for Intel. Sideways. MasterCard. MasterCard fell off the chart just a little bit, but again, we have our drawn in line here at 340, 342, and we can see that right now it's trying to defend that as support, although we've broken through it. So we're going to have to start looking at 330-ish if we continue to move lower. But right now, I'm still saying it's still trying to defend this 342, 340 price level. Sideways to down on MasterCard. Netflix. Some rumors about being taken over. Here's the big thing: $300 down to low 60s. There's a price drop for you. But we can see that we broke through here, and now we're testing this 92 price level, which was our last swing high here in November. And then we have the gap. filling in this gap area if we can hold up above 92, filling in this gap area. We'll finish off a price line, which basically is just channeling beauty. We see this big range, 440 up to 550-ish. The last time it came here and touched here in the mid-December. Now we're just kind of a sideways mess, really. And I'm not sure what's going to be our catalyst to move up here. If we get above the 200, maybe we'll go back up and retest this. Right now, it's just a sideways mess. Sideways. Looking at our three market sentiment indicators, the dollar, gold, and crude oil, we see the beautiful move up here from September for the dollar. We had this inverse relationship where as the dollar was moving up, the market was moving lower. When the dollar moved down here in October, the stock market moved up. The pullback in November, the dollar constrained. December and January, we're not seeing that inverse relationship, but we have seen the market trying to put in this base here in 81. Of course, this has a lot to do with the debt crisis and the stability of the euro. So some flight to safety here in the dollar. So right now, certainly bullish and certainly trying to hold up here at 81. Now, with a strong dollar, what does that mean for gold? Well, initially we saw some weakness in gold. But here in January, we're seeing a move up here of gold into our back into our range of 1600 up to about 1670, and we ran right up there and pulled back from there. So we're back in this range. We were in this range for a while. You can see here the month of October we stayed in this range, and possibly we're back into it. So what's going to be our catalyst? Is anything going to happen with the dollar? Any instability in the dollar? I'm not sure, especially with the instability of the euro. Finally, crude oil is back into its 96.102 range. Here we can see that range that it was in, and now it's back in that range. Again, 96 basically up to 102. As we come to our education spotlight for this week, we're talking about goals. And, again, when we're talking about trading plans and trading system, in the end, it's about goals. It's about being prepared, knowing where you want to go, having an objective. And when you have that goal, that has to be realistic. It's not about making $10,000 a day if you only have a $1,000 account. It has to be attainable, it has to be realistic, and it has to be measurable. At the end of each week, at the end of each day, at the end of each month, however you stagger your assessment, you need to see if you're taking the right steps to attain that goal and see if you have to make adjustments to your goal or to how you're achieving that goal. You have to have a purpose. You have to have a reason for being. You have the reason to be there at 9:30 or whatever time you start trading. Without that, then you're trading willy-nilly, and willy-nilly results will happen. So, again, we want to make sure that we set goals that are attainable and that set goals that are measurable, so that we know that we're headed down the right road. As we've been saying, we're really excited. Monday starts our new channel, You Make the Call Stocks, where we're going to give you dedicated videos to each of these big market moving companies. Just short videos focusing on them, the pluses, the minuses, the technical analysis, the earnings releases, the news, the Apple event coming up with where they're going to be talking about digital textbooks. We're going to give it all to you. And so, again, the channel is called You Make the Call Stocks. So you got to subscribe so you can get that information. We have our free video course for you. Helps you frame the market and what you should be including in your trading setups. We hope that gives you a gauge of who we are as coaches and how we can help you one-on-one develop a personalized trading plan. And we focus more on the coaching and the mentoring than we do our video course. Our video course is affordable. We're not charging thousands of dollars. It's $99. It gives you everything you need. Introduction to technical analysis, chart patterns, money management. Then we talk about trading plan components, and we talk about trading setups. This is as good as it gets, and we're only talking about $99 because we want you to have enough money to focus in on your coaching. We also want to introduce a new program here. We have managed forex accounts full transparency. We develop an investing plan specifically for you. The hedge fund is up to over 300% since June. Many of our clients saw 150% in 2 months. Our more conservative clients are seeing 10% monthly. Again, nothing's guaranteed, but go ahead and give us a shot. Risk-free, full transparency about how you have access to the money and how we are investing the money on your behalf. And of course, if you're looking for a charting package, we have that for you. It works both on pieces and Mac. Find that fast, latest and breaking stock. But in the end, it doesn't make a difference about the system indicator or if you have a managed account. If you don't have the education, the knowledge to make educated decisions for yourself, you won't pull the trigger. You won't hire the fund manager. You won't pull the trigger on the trade. You have to take the time. Remember how we started. The most dangerous thing is an uneducated trader. Take the time, learn the facts, and develop a strategy that's going to help you in the long run. Thanks, guys, and I'll see you next time.